Steve Cortes, why do I want to go against the herd? I thought the trend was my friend.
Well, sometimes it is, Greg, but I mean, the biggest reason to go against the herd is because the herd is often wrong. And following the herd can be very dangerous. Two examples that are pretty stark would be the tech bubble around the year 2000 and the housing crisis in 2008. Now, I'm not saying the herd is always wrong, but it is wrong often enough that I think it pays to be skeptical and to try to think in a contrarian way.
Well, right now the herd is very bullish on China. How do I make money from China's implosion, which is what you write about in the book, if I'm not Jim Chanos?
Right. And I think that China right now is the greatest risk to the global economy. Not only do I not think that is the ascendant power that is going to overtake the United States, I think, in fact, they will be lucky to even keep their state unified. I think it may very well become a failed state from an economic collapse. Now, how does a regular person play it? I think the biggest thing for regular folks is just to avoid China exposure. So not necessarily profiting from the Chinese demise, but at least avoiding the risk. And by that, I mean the really cyclical multinational names. Names like Caterpillar, Freeport-McMoRan. And these stocks, by the way, are starting to trade very poorly based on the Chinese stock market. So I would avoid those stocks at least. And if you're a trading type, I think you short them. Another way that I'm playing the China trades, I'm short the Australian dollar. Australia is extremely correlated to China. I think the Australian dollar will go well below parity versus the US dollar based on China.
Well, a lot of the things that we're hearing about China now, we heard in the 80s about Japan. What should I do with Japan?
Yeah, exactly. And I really do think this is Japan Inc. 2.0. We were completely convinced in the 1980s that Japan was about to overtake us right now. And we hear the same kinds of things about China now. And in both cases, it's a command economy. It's top-down central planning, which I believe never results in long-term sustainable prosperity. Japan is a little trickier because the United States, though, is not as nearly as levered to Japan in terms of U.S. companies. We don't sell a whole lot into Japan. But to me, the biggest trade here and what might be the most surprising trade is to sell the Japanese yen. And so the yen has been getting extremely strong for years, confounding many on Wall Street. But I believe the dollar yen here at 77 is extremely mispriced. I believe it belongs well north of 100. I wouldn't be surprised if at some point we even get back to the levels where we were in the 1980s, which is closer to 200. So I think you buy dollar, sell yen.
Turn on the TV right now. Everyone's telling you to buy gold. However, you say now is not the time, maybe even short it. Tell me why.
Yes, and I think gold is fool's gold right now. Gold is predicated upon the premise that there's going to be inflationary growth. And I think right now the world is facing exactly the opposite. Problems in China, problems in Europe. These are very, at least disinflationary and perhaps even deflationary. Gold did extremely well. The last time gold did extremely well was the early 1980s. And the reason gold went crazy in the late 70s, early 80s is because we saw a serious inflation problem in the United States. And it was primarily spurred by rising wages and rising property. We have the exact inverse now. Real wages are falling and property is falling very hard. That is just not the recipe for inflation. And in that environment, I think gold will not do well. And I think gold represents a bubble right now. And I think investors should at least stay away, if not actually short it.
Well, for a lot of the reasons you just mentioned, a lot of people are downbeat about the United States. Yet you're bullish on the U.S. stock market. Tell me why.
Yes, and I am long-term. Look, I think unfortunately we are so exposed to the China situation that first I think the U.S. stock market is heading lower, and perhaps demonstrably so. But looking long-term for the very macro, again, as I mentioned, I do not buy at all into the thesis that emerging markets are the place for growth. I think it's the United States, and I'll tell you two reasons. One is the United States for the last 40 years has been 25% of world GDP with amazing degree of consistency. So in other words, while the emerging markets have grown, while China has grown, it's not been at the expense of the United States. It's been at the expense of Japan and Europe. I think that kind of performance over many decades indicates that really we are still the primary driver of the world economy. And the second reason is that the spoils go to the young in the world. And the United States is the only industrial power that is growing in population. And I think it's hard to exaggerate just how important that is. Economies need more people. They need growth in every way, including population. The United States has the highest birth rate by far in the industrial world. Add into that massive immigration, and the United States is going to be growing far, far into the future. And that is not the case, for instance, in China, where the one-child policy has made it the fastest aging country in the world. So I want to bet on the young and young workers, and that's America.